statements today, right? And on Moodle, we had problems that I suggested that you work, right? Did anybody make copies of those, or do you have your computer with you so you could call them up? I only made 10 copies because I thought you guys would all have copies, or a bunch of you would. And the other class took 7 of those copies, or 6 or something. So anyway, yeah, I was trying to save trees. Anyway, on the front page, on the front of these pages are the problems, and on the back pages are the answers. So out there on Moodle, you'll find both, right? Every other page, problems and answers. So don't look at the answers to go out. If you work it, obviously, you can crank through it. I'd recommend that you really go after this stuff. By the way, in the book, they use something called the indirect method and something called the direct method. And then they tell you something like 97% of companies use the indirect method. That's because it's optional to use the direct or indirect. Everybody always says, oh, well, it's harder, it's more work to do the direct. Not really. You got all the journal entries that you want. What it really is, I think, is that people don't want to give up any more information than they have to. I don't mind telling my shareholders lots of stuff about the company. I want to give them all the information they need to make decisions about whether to move fast or not. But how about the government? I don't want to tell them stuff I don't have to tell them. Right? And what about competitors? I clearly don't want to tell them more than I have to tell them, right? In my financials. So, I think people just opt to put out less information, a little bit less. It doesn't make much difference. Okay? By the way, I don't think this statement adds very much. It doesn't have very much information. This is very much use. You could probably get close to doing a cash flow statement for a company if you just had their balance sheet and income statement sitting in front of you, and you had never seen any of their transactions, you didn't know anything about the company. You can get real close. You can't get all the investing and financing stuff, but you can get pretty close. And reading the notes of the financial statements, you might even get that. So this statement doesn't add much. Why do people like it so much? A lot of people really love this statement. It's because they know what cash is. Before you guys started this class, did you know what cash was? Did you know about cash being put in your bank account and cash being taken out? And how much you have at the beginning and how much you have at the end? You don't need to know anything about accounting, do you? But do people know what deferrals and accruals are? No. You do now, but most people don't, right? They never had an accounting class. They don't know what a deferral and accrual is. Which is more valuable? How much net income you have or how much change in cash you have in a particular year for a company? Now, I'm not saying you want to run out of cash. You don't want to run out of cash, right? So you want to manage it. You want to be careful. But you know what? I want to manage my employees, too. And I want to manage my land, building, and equipment, all the stuff I've got going on in my business. It's not just cash. Cash is an asset I use to generate wealth, right? You can have too much cash. What if I have millions of dollars of cash sitting in a bank account, generating absolutely no revenue, or additional revenues, and no additional wealth? What should I do with that cash? Get it invested in something. Get rid of it. Get it invested. Give it back to the shareholders. There's nothing else. So they get invested in something. We should have just cash laying there to lay there. What for? Oh, so how much cash you have is not a measure of how wealthy you are. Right? How much wealth you have. That's all your assets less all your liabilities. Everybody talks about how rich Donald Trump is, and I kind of think I don't know how rich he really is or isn't. He has a tremendous amount of debt, which most people do that are wealthy, right? But he tells us how many billions he's worth. I don't know. Nobody knows, right? He's not going to tell anybody either. Not really. I don't know how wealthy he is. Most politicians don't want you to know how wealthy they are. He wants you to know, right? He wants you to think he's the wealthiest person on earth. He's not even close, right? Not even close. And what he does is he borrows a whole bunch of money and he has a whole bunch of assets. Well, you know what? If you borrow $100 million and you have 80 million of assets, you are worth negative 20 million, right? If that's the case. I don't know where he's at or anybody else. It's not my business anymore. Right? I know that I have less assets than I do liabilities, right? Like my grandkids. Pay a whole bunch of money. No. Yeah. So, I think I have a few more assets than I do liabilities, but not many. Okay, anyway, this can be easy, you guys. Nothing to it. Okay, we are analyzing cash. It went away. I waited too long. This is going to be easy if you work at it. This statement This statement is going to analyze cash. Did you guys know that beginning cash plus all the cash that comes in, less all the cash that goes out, is ending cash? And you know what we're going to put on the statement? We're going to write down the beginning cash and the ending cash, take the difference, and that's going to be the total of the statement. Change in cash. I'm not kidding. Yes. So we know what the answer is before we start. Okay? It's the only thing we're going to do in this class and in most classes where you know the answer before you start. Remember that in grade school when they give you the answer in junior high? They give you the answer to the math problem before you work the problem? It was always nice, wasn't it? Have that answer. Or you go to the back of the book and you can find all the odd answers or even answers or whatever. Those were wonderful, weren't they? Right? Life's not really like that, but in this case it is, right? The statement's that simple, okay? So the change in cash is going to be the total of the statement, okay? Then the other thing, we are going to analyze the balance sheet. What I'm going to do is I'm going to write down the change in cash, okay? That's one of the assets, right? And then I'm going to write down the change in every other asset and every liability and every equity account, and all the ones except for cash. I'm going to write them down, right? When I add those up, because debits equal credits, what am I going to get? If I wrote down the change in every account except for cash in the general ledger, and I add them all up, what do I get? The change in cash. That's all this statement does, okay? So relax. We'll make this real mechanical, and then get understanding on top of that, it'll be easy, okay? And it's logical where the things go in the statement if you understand what they're trying to do in the statement, right? So you don't have to memorize it. Most people say, oh man, there's just so many numbers on this statement, I can't remember where they all go. You don't have to. There's only a few types of things, right? What do we have on the balance sheet, you guys? I think we have current assets. We're going to put those all together, okay? Changes in the current assets. We have non-current assets. We are going to put all those together by themselves. We have current liabilities. We're going to put all those together, but we're going to put them with the current assets, and I'll explain why in a minute. Those are going to go together, okay? We have non-current liabilities. We're going to put all those together too. Ah. And then we have equity. There's no current equity. The equity is non-current. Well, it kind of is current equity. It's the net income. But we're going to put that with operations too, right? With current assets and current liabilities. So there's going to be equity, and equity we're going to put together with the non-current liabilities. So it's going to look like this. These two go together, right? These go all by themselves, okay? And remember in equity, there is the income statement, which is revenues less expenses is net income. Remember in equity, net income gets added to retained earnings, right? Everybody agree with that? So what we're going to do is we are going to put the net income with current assets and current liabilities because those are part of operations, okay? Would everybody agree that my revenues are from operating my business? Sure. Are my expenses from operating the business? Sure. Is my net income therefore from operating my business? Of course it is. Okay? Now let's think about your assets and liabilities. Why do you have current assets? Give me one of the current assets other than cash. Cash is going to be the total of the statement. What's another real common one? Current assets. Current assets. Equivalent would be non-current. Inventory would be one. Okay? Inventory. What's the other real common one? You sell to other companies, they're going to pay you later. Accounts receivable. And then we pay insurance companies, maybe pay our rent in advance. Prepaids. Those are the big groups, right? Accounts receivable, inventory, and prepaids. Okay. Why do you have inventory? When you go to Walmart, do they really want to have inventory there? I used to say you shouldn't go to Walmart, but they're starting to pay their people better. Starting to have better business practices. You know why they're doing that? Pressure from their customers. Everybody says there's nothing we can do. Sure there is. If you don't like what somebody does, do not buy from them. And they will change it. We have to do it through voting. We can vote with our dollars. And trust me, things are changing in our society a lot because of you young people. Because you care more than older people do. I can always get that. real old people like me here, we're back in the 60s and 70s when we were going to have a great society. And the group in between decided not to have a great society. Why would you not want a great society? It became a bad thing to have a great society. Now you guys are doing weird things like voting for a socialist for president. Wow. That never would have happened 10 years ago. No way in the world would somebody admitted they were a socialist. Because everybody pretends socialism and communism are the same thing. You know, Sweden has exactly the same government as Russia, right? The same as China. Exactly the same. They live in Sweden and China. Anybody know anybody from Sweden, Norway, or do they think they're communists? No, not hardly. Not hardly. They know the difference between socialism and communism. We didn't in this country, but now apparently we do, because Bernie Sanders is getting votes from crazy young people who actually vote for a socialist. By the way, I don't support Bernie over Hillary. I think it's time to have a woman president. Really good reason to vote for her. She's pretty liberal too, right? So, no, I support Trump personally. Don't you guys? I like totally irrational people to be in the White House, you know, with their nuclear weapons. That'd be good. Yeah. So, how come the Republicans aren't supporting the guy from Ohio that we can't even remember his name? Casey. You know, he's intelligent, he's thoughtful, he's conservative. I don't like that much conservatism, but because he doesn't think people should be paid very high wages and stuff. That bothers me. But, you know, otherwise, you know, he's a bright guy. How come nobody wants to vote for him? He's not entertaining. He's not crazy. Is that it? Not entertaining, not crazy. They want entertainers. Yeah. So that's what's wrong with Hillary, too. You know that, right? She's not very entertaining. They're entertaining women. Why couldn't we have, what's her name, the singer? Gaga or something like that? That'd be perfect. Isn't that what they call her? Gaga? What's the old one? She could do it too. The one that had all the videos and one of the richest women in the world. Well, Beyonce. She's not old. Well, she's pretty old, but there's even an older one than her. Yeah, Madonna. I think Madonna could be president, don't you? She's sort of crazy and, you know, entertaining. Yeah, okay. All right. Yeah. Or Beyonce. That'd be good. Yeah. Sort of like having Trump. Only. No, wouldn't be like having Trump. Okay, anyway, so. All right, guys. Would it make sense, though, if you go to Walmart, that's where I started. When you go to Walmart, do you think Walmart really wants to have inventory? No, Walmart does not want to have inventory. What do they want? Your cash. Why do they have inventory? To get your cash. That's their operations, right? Okay. Accounts receivable. Does anybody really want accounts receivable? No, they want the cash. Why do they have accounts receivable? Because they want to sell more. They get more cash later, right? Got it? That's it. Prepaids. How many of you like to pay your insurance in advance? None of you. Why do you have prepaids? Because you have to. Because insurance companies are big and powerful and you're tiny, right? Plus, what's the deal? They have more negotiating power. What's the deal? Would you pay your insurance premium after you knew you hadn't had any accidents? Probably not. We wouldn't do that, would we? Probably, well, actually, those are some daydreams still would, I guess. But a lot of people wouldn't, right? Okay, anyway. Now, think about the current liabilities in the same way. Accounts payable are wonderful things. I can borrow money and pay for it later. But really, why do I have the accounts payable? To finance my inventory. Got it, guys? Salaries payable, rent payable, all that same thing, right? I can pay later, so I do, but it's really for operations, isn't it? Okay? So those go together. Does that make sense? So what we're going to do is we're going to put the net income, revenues and expenses from operations, together with the current assets and current liabilities. And then what we're going to do, and we're going to call that section what? Seeing it's from operations. How about cash flow from operations? Got it? It's that simple. And then you don't have to remember, it just makes sense. Cash flow from operations is income. And the changes in the current assets and current liabilities. By the way, we're only going to show the changes in the current assets and the changes in the current liabilities. Okay, a little triangle represents change, okay? Changes in those accounts. The reason is there are millions of transactions. Yum Brands, how many times do they sell tacos? Sell chicken per day? Thousands and thousands. Do you want to write them all down? Of course not, okay? So you might sell things and then you might collect the money and sell and collect money. Got the idea? Revenues and expenses low. So what we do is we just take a change in those accounts. Tiny transactions and millions of them. Okay, what we do for the non-current assets, though, like what? Building, land, equipment, okay? Investments in other companies. we're going to show both the increases and the decreases in those accounts. Why? Because they're big and there aren't very many transactions. Even young brands, how many buildings do they build a day? You know, I bet it's not even one a day, huh? Right? Got the idea? So we're going to show both the increases and decreases, buying them and selling. Okay? Same thing on the non-current liabilities and the equity, right? What are those going to be? Massive, right? Issuing stock, buying back treasury stock, right? Or retiring stock maybe. Issuing bonds, right? Issuing mortgages, paying them back, okay? Big transactions, not very many a year, okay? So we're going to show both the increases and decreases. Everybody got the idea on that? All right, what are we going to call the non-current assets, buying them and selling? That is investing activity. We're talking about where the company invested their money, right? Okay? So this is going to be investing, just like that. This is investing activity, okay? Investing activity. Got it? So I've got cash flow from operations and I got investing activity. And then guess what? Non-current liabilities, increasing and decreasing those, and equity, increasing and decreasing those. What's that going to be? Financing. Many of you have not read this chapter yet. Boy, you really wish you had. Okay, do it fast. Do it fast and start working these problems. Okay, so anyway, yeah. That's financing activity. By the way, when we do the statement, this is going to be upside down. That's the way you can remember it. When we do a cash flow statement, what we're going to do is we're going to show operations first, then investing, then financing. But what does a company do first? If you were to start a new business, what's the very first thing you'd have to do? You'd have to do financing, wouldn't you? You'd have to do what? Invest your own money in the company, cash and other assets, and issue yourself stock. That'd come first. Let's say we start a business and we put $1 million in. All of us get together and we put $1 million in, right? So we debit cash $1 million, credit common stock $1 million, and give ourselves the shares, right? Now what? What would we immediately do before we start buying any assets? Go borrow money, because we don't want to just use our money. I'd like to borrow some money cheap and then invest it and earn more with it, right? Okay, I'm not going to just use my money, but you got to put your money in or nobody else is going to loan you money. Got the idea? Okay, so then we go borrow money. What's that? Still financing, isn't it? The sources of financing are our money and borrowing from somebody else. That's where the financing comes from. Good, right? Okay, so issuing debt, mortgages, bonds, whatever. Okay, got the idea? That's going to be financing too. That's what comes first, but that's going to go on the bottom of the statement. Okay, it's upside down, like I said. Then what do we do second? We invest in non-current assets, right? So that's going to be in the middle, okay, on the statement. Okay, I guess where it belongs. Okay, and then what do we do last? We operate. But for some reason we put operations on the top. I guess people think that's more important, and maybe it is. Everybody got the idea? So now we're ready to set up a statement, and this is really critical for you. Where do the current assets go? Cash goes at the bottom of the statement, but where do all the current assets, other ones, go? Under operations. Where do all the current liabilities go? Under operations. If you see a current asset or a current liability, where are you going to put it? Under operations. This is simple. And why do you do that? Because it's part of operations. That's why we have them. Okay, where are you going to put the net income? Under operations, because revenues and expenses are from operations. Okay? Where are we going to put buying and selling all of our non-current assets? Under investing. Where are we going to put issuing debt, repaying the debt, issuing stock, paying dividends? Where are we going to put that stuff? Under financing. You got to make it. You don't have to remember where to put things. There could be 1,000 accounts you're messing with, right? And you're grouping them all together. Who cares? They got to fit in those categories. That's it, isn't it? They're only assets, liabilities, equity, revenue, expense, right? And now we're splitting assets into current and non-current, and liabilities into current and non-current, which we already did, right? There's nothing new in this chapter. So here we go. Let's do a statement, okay? Take this information. Now, here's what I suggest to you. Write down the change in every account once and only once. Right? And if you do that, when you add up the changes in all these accounts, you'll get the change in cash. That's it. Okay? So there's nothing to this. Don't write down a change more than once. Don't fail to write down a change. It won't add up. So be real methodical about this. Every time you do an account, put a check mark next to it, okay? And it's done. Don't do it again. Those are the most common errors. People get half the account done, won't do the other half. They'll put it down twice. I actually see people put down the change in cash twice. Once as a total and once in current assets. What? How could that possibly add up to the change in cash then, right? You have to be off by that amount, okay? So what do you want to do at the top of this statement? Maybe put down the company name. Always do that. I'll actually even give you points for it. Eaton Company. Write it down. In real life, we want it to be perfect on a quiz. If you can abbreviate, it's fine, with me at least. And then we're going to call this a cash flow statement or statement of cash flows. And of course, you write that out real pretty. Nice. Not a computer anyway. All right. Is this for a year ended or for a specific date? You're starting with beginning cash and working your way down to ending cash. Are you showing more than a year on this statement? Of course not. It's more than year ended, right? It's only the balance sheet that's a specific date, right? That's because you never closed the balance sheet accounts. So you're really showing the activity from the start of the company through the end of the year, right? Isn't that true? So we don't say from the beginning of the company to the end of the year. We just say the date, okay? Everybody got it? So this is for the year ended. And this one happens to be 12/31/2002. You can see they have not changed this statement for a while, huh? Okay, nothing's changed, huh? All right, so that's a good thing, I guess. It's neat to not change. So what do you want to do? What are the three sections? Operations. So operating or operations, cash flow from operations or operations. Okay, and then you go down about half the page. Be real mechanical about this. Put the name at the top. Go, write down operations. Go down to about half the page. I'm going to put it on the right-hand side so I have room to work here, right? But you go down about half the page. Write it down. What comes next? Investing. Got to have them in order, guys. Hey, look at that. I actually use small case in there. The other class, yeah. I always make these small case and these caps. I have no idea why. Okay, then go down to about 3/4 of the page down. What's the last section? Financing. Notice they're upside down so you can remember, right? Opposite the order you do them. Okay, and then let's do the total of the statement. Isn't this wonderful? It's like those math problems in junior high, right? You got the answer before you start? This is nice. Okay, so what we're going to put down here is the change in cash. Okay? What's the change in cash? An increase or a decrease? Take a look at cash. What happened to it? It went down. Oh, by the way, 2002 is first, then 2001. Some of the problems flip-flop those. Be careful. And I don't mean to be tricky or something, just some of them are done differently. Okay? So a real balance sheet, what would we show? The most recent year first and then the older year, right? But if the problem's the other way around, don't let it bother you. Just read carefully. So what happened? It went down by 7? So what we'd say is decrease in cash. No kidding. Put brackets around it because it's a decrease. 7,000, right? Or whatever it is, 7 million or something. Got the idea? That is going to be the total of the other three sections. I already know the answer before I start. You like it? And then write down beginning cash. How much is that? What was it, 11? And then write down ending cash. This is how we calculated it, of course. 4, right? You already got a whole bunch of points. We're doing math. No kidding. Getting it set up. Okay? A few points anyway. All right. So now what? Let's do all the accounts. Oh, by the way, put a check right next to cash. Don't do it again. Do it once, huh? You like that? Okay. What do we do next? It does not matter. You can write down any account you want next. Whatever you remember to do, I guess, or however you want to approach it. Can we go through the accounts in order? Absolutely, we can go through the accounts in order. What if you remember net income comes first under operations? Can you do that first? Sure, lots of people like to do that. Okay? By the way, if it's net income, we pretend, by the way, that everything was for cash. If you have positive net income, would you have more or less cash if everything was for cash? You'd have more. What if you had net loss? You'd have less. Put brackets around it if it's a loss, don't you think? Okay? So let's say that we remember the net income is first under operations. We want to do that first. What account in the balance sheet am I analyzing when I write down net income? Where does it go on the balance sheet, net income? Where do you put it on the balance sheet? In what? What account? Anybody? You guys don't know that you close all your revenues and expenses to an account named, maybe income summary, and then you close income summary. So what? Retained earnings. Of course, you know that you put the net income in retained earnings, don't you? So we're analyzing retained earnings, I guess, because we're not analyzing the income statement here. We're analyzing the balance sheet, right? Okay? So if I write down net income here, how much is net income, by the way? You can look at an income statement and find it typically. That's not bad. Or it'll be in a paragraph. They'll describe it or something. 56 net income. Do I have more or less cash if I made money? I have more, right? All other things being equal, right? If everything was cash revenue and cash expense, I'd have 56 more cash, wouldn't I? Okay, 56. What account did I just start analyzing here, you guys? Retained earnings. What's beginning retained earnings in this company? Go down to retained earnings. What was it at the beginning? 92. Come on, you guys. Come on, come on. It's really cool that you're all here. We had great attendance today. Are you here mentally too? Or just here? You can always say, you know, I came to work. I didn't get anything done, but I came to work. You shouldn't fire me because I was here every day. I love it when somebody will say that to me. You know, I always show up on time. I even stay late a lot. You know, yeah, but you didn't get anything done. I'm like, well, yeah, but I was here. Don't I just get paid for being here? You guys, you don't want me to be, you probably don't want me to be your professor at all. But anyway, you would not want me to be your professor if you learned nothing. I work really hard to try to get you guys to learn this stuff, right? It'd be much easier. How many review sessions do I do a year? How many hours do you think I spend in review sessions a year? I don't know. How many do I have to do? 0. Why would I do something like that? I'm 65 years old. What am I doing? I kind of like you guys to know this stuff, right? This is what I do. So am I getting paid by the hour? Or am I getting paid based on how much you know? Nobody monitors how much you know, by the way, except you and me. I know. I know how much I get done. I know whether or not you guys that want to become a CPA pass the exam on the first try or the second or the third or never. I know, right? I'm measuring how much I'm getting done. So what I want you guys to do. You go to work, you measure how much you get done, and you will be the boss. Why will they make you the boss? Or you'll make yourself the boss. Start your own business. Why would that happen? Because you can, and you're doing the work anyway. Might as well get paid for it if you're going to do it. Don't you think? Okay? So come on, come on, come on. And I know you're tired, and I know it's the end of the semester, but I also know you only have to work for 2 more weeks, and I know that if you bust your ass, your GPA will be 0.5 higher than it would have been otherwise. You can take a 3.0 and turn it into a 3.5. You can still do it this semester. Or you can take a 2.0 and turn it into a 2.5. You can do it. You can take a 1.0 and turn it into a 1.5. What would be better in every single one of those scenarios? Take the higher one, huh? A little bit of work for 2 weeks. Come on, right? And you're tired, so, you know, those who are really tired will quit, and those who aren't will take their jobs away from them. They'll win instead of those losers like the Ducks, right? Like Oregon. You know, there's only one winner in this country, and I'm hoping it's not North Carolina. Did you see what happened to Oregon State in women's basketball? It's the worst loss ever in the tournament. Why do all the women go to the same university? Yes, UConn, right? They almost doubled their score. It was almost 100 to 50. It was 90 something to 50 something. Really, unbelievable. And Oregon State was the second best team in the nation, supposedly. Wow. Anyway, that was a semifinal. Sad. I didn't watch it, luckily. And I don't care about the Beavers anyway. Oregon and Oregon State are 35 miles apart from each other. Isn't that strange? The 2 big schools, even closer than UK and U of L. And they're both out in the country, kind of, especially Corvallis is, where Oregon State is. And they hate each other, of course. You know. Besides, Oregon State has ugly uniforms. Have you seen their uniforms? It looks like Halloween. It's worse than Tennessee. Any Tennessee fans in here? Oh, that's too bad. We get insulted. But anyway, she's got kind of orange on today. It's not as bad as Tennessee's color, though, right? No, it's very nice. It's very nice. Pastel orange. So, okay, anyway. But the orange and black are their colors. It's just like Halloween. Horrible. Okay, anyway. Luckily, I didn't do my PhD there. All right. What did we just do? That 92 grows to what on retained earnings? What is it at the end? 132. Gee, it only went up by 40. And they put 56 in, didn't they? Wouldn't the net income come in here, you guys? How much must they have taken out? Must be 16. You know what? Down below they tell you there's a dividend of 16. Do they need to tell you that? Hint, hint, hint for the test quiz final, right? You can figure it out, couldn't you? The dividend must have been 16. Okay, I want to explain the change in this account, which is 40, and I already put 56 on the schedule. What else do I need on the schedule? The other 16. Got it, guys? I got to do both pieces. Okay, what would that journal entry be? Let's see. It's debit retained earnings and credit what? If they declared it and paid it on the same day. They paid it. Credit. Debit retained earnings for a dividend and credit. What is it? Cash. You did say cash, right? Yeah. Okay, cash. Nobody wants to admit they know anything. Okay, good. All right. So I'm sorry I caught you knowing that. Okay, anyway, so dividends paid, right? 16. Would that be cash going out or what? Yeah. What's 56 less 16? 40. Ta-da! We explained the 40 change. Got it? Check off retained earnings. Okay, then I don't care. Again, I don't care what order you do these in. Let's do easy ones. Let's do the current assets and current liabilities. Take a look at this. Current assets and current liabilities. Here we go. I'm only going to show the change. So now we can check off these really fast. Which one's the current asset? Cash was, but we already did that account. What else? Accounts receivable. Do we have more or less accounts receivable? More. What does that mean? I have 80,000 more accounts receivable. I must have 80,000 of sales that I did not collect. Would you guys agree with that? I have less cash than if I had collected it. That's simple. If you have more of a current asset, just pretend you bought it for cash. Got it? Because you kind of did if you didn't collect the cash, right? Okay. What's the next current asset? Check off the accounts receivable. What's the next one? Inventory. Okay, gang. Inventory. It went down by 35. What do you bet that you have cost of goods sold that you didn't use any cash for? So your income is too low from a cash standpoint. Really what you could say is you sold it for cash. I didn't replace it, so I have more cash. Make sense? Now, remember, what we're doing is what happened to cash here. Receivables went up, I have less cash. Inventory went down, I have more cash. Got the idea? Okay? So, no brackets around that one. And now check off inventory. Prepaids, that's a current asset too, right? Up or down? Up. So if prepaids went up, what did it go up by? 2? What did I buy them with? Cash, of course. Okay, that one's easy, isn't it? Got it? Now you can check that one off. We're done with the current assets, aren't we? Because plant and equipment are non-current assets, aren't they? Okay, good. All right. Let's switch to the current liabilities because they're simple. And plant and equipment and accumulated depreciation are a little tougher. They're going to be a little tougher. All right. So let's see. Accounts payable is current liability, isn't it? Did it go up or down? It went down? No, it went up, didn't it? Yeah. Went up by 75, did it? All right. Yes. You know, it's credit accounts payable, debit what, effectively? Cash. I didn't pay the bill. Got it? A whole bunch of expenses I didn't pay for, inventory I didn't pay for, whatever. Got it? Got it? So if you have more of a liability, it's just the opposite of the assets, right? If you have more of a current asset, you use cash to buy it. If you have more of a current liability, you borrow cash. Way you think about it, right? Okay? How about it? The only other current liability is accrued liabilities, like salaries payable, rent payable, that kind of thing. So what's accrued liabilities? This is a nice review of the balance sheet and income statement, too, isn't it, when you do this, right? So it wraps all the things together. I like it at the end of the class. So what do you think? Accrued liabilities did what, up or down? They went down. What do you think you paid them with? Cash. Right, guys? I had less cash because they reduced my accrued liabilities. So now you can check off that account. So let's go back to plant and equipment. Okay, we got about half the accounts done. Now we got about half the points. Okay? Plant and equipment. And that won't take you any time at all. So I got plant and equipment, and I have accumulated depreciation. Right, everybody? All right. What happens in plant and equipment? Let's see, what did we start at in plant and equipment? What was the balance? 420. What is it at the end? 500. What happened? It went up by 80. What's the minimum amount you must have bought? 80. Right? But could I have bought more than that? Yes, if I... Well, depreciation is going to go over here, though. That's good, though. But depreciation is going to go over here, not in plant and equipment. Sold some. You got it. Exactly right. Sold some. Right? And if we sold some, what do you do when you sell it? You'll also retire its what? You get rid of the asset with a credit, right? Get rid of the accumulated depreciation. So you'll have those two together, won't you? Ah, yeah. Okay, so what are the journal entries here? And she picked up depreciation expense over here. That's good. So when I buy something, I pretend everything's for cash, right? When I buy something, what would the journal entry be? Debit, plant, and equipment, right? Whatever it is, building, equipment, land, whatever. Okay, debit it, and credit what? Cash. So that's one number I'm looking for. By the way, where am I going to put that? Operations, investing, or financing? It's a non-current asset. Where's it going? Investing. Got it. It's easy, isn't it? Okay. And then, what would the depreciation be? What would the entry for the depreciation be? Debit what? It's depreciation, you guys. What do you debit? No. Depreciation. Recording my depreciation for the debit. Yeah, debit depreciation expense. Yeah. All right. And credit? Accumulated depreciation. You know, a lot of the fun I get, you guys, is just showing off that I know stuff that you don't. Even after you know it, you'll let me know stuff that you and pretend like you don't. You know, you guys know all this, don't you? I'm not giving you anything new here. I know you know it. Let yourself relax and use it, okay? How many times have I said that in this class? Just relax and use what you know. First, you work hard so that you know it, and then once you do, relax. And just let yourself use it. And when you go to work, relax and let yourself use it. And by the way, if you screw something up and then you fix it, nobody will care that you screwed it up. Nobody will care. It's right. It's done. You have to work a few more hours to get it fixed. Are they going to pay you twice to do it? No. So do you want to screw everything up and have to fix it 10 or 12 times? Or would you rather just do it right in the first place? But do you want to do it so slow that nobody can afford to have you do anything? Don't go there. It's got to be fast, right? And you move. If you work as fast as you possibly can, when you make a mistake once in a while, you say things, this is what I like. You know, once I made a mistake, I thought I made one. You like that phrase? I got that from a guy I used to work with years and years ago. Once I made a mistake, I thought I made one. Get it? And he'd always say that every time he screwed something up. I like that a lot. You can use that if you want. Right? After you fix it. Right? I made a mistake once, I thought I did it. I made a mistake. Okay. Anyway. All right. So we have that entry, right? And then what else would we have if we sold an asset? What do you get when you sell it? Cash. What do you give up when you sell it? Plant and equipment. What else happens? You eliminate the accumulated depreciation, don't you? And what else do you have? A gain or a loss, right? Absolutely. Okay. What do we know here? I know the beginning, plant and equipment, I know the ending. What do I know about accumulated depreciation? What was the beginning? 70. What's the ending? 85. What's the minimum depreciation expense must have been? 15, right? Had to be. But okay, let's look around and see if there's any more information. Look down there in the paragraph at the bottom. They sold some equipment for 18. What's that? The cash they got. It's too easy. What did it cost? 30. I think that comes out of equipment. What do you guys think? I think 30 comes out. Oh, how much accumulated depreciation did it have? 10. What happened to me? Gain or loss? That's 20 change in plant and equipment and accumulated depreciation, right? 30 less 10. The book value was 20, wasn't it? I got 18 for it. What happened to me? Loss, of course. Loss on sale. Fantastic. Up 2. All right. Now what I want to show is the cash flow. How much cash did I get from selling that piece of equipment? 18. Where am I going to put it? Cash flow from what? This is the trick, you guys. Cash flow from what? Investing. Got it. Sale of equipment. Just like that. It was equipment, wasn't it? If it was building, we'd do building, whatever it is. Okay, we got 18. But I want to explain 20 change in those two accounts. 30 less 10. Where's the rest? Oh, 2 is in the loss, isn't it? That I have to do something about that loss. It's in operating income. Take a look at the income statement. There's 2 there for loss on sale of equipment, right? I've double counted the loss. I reduced sale of equipment from 20 to 18. And then I've got the 2 loss over on the income statement. So what I do is I add the loss back. It seems backwards, doesn't it? You're adding losses and subtracting gains. I'm going to add the loss on sale, which is 2. And what's the deal? 2 plus 18 is the 20 change in the account. Got it? Got it? Okay, so we picked it up. So you add back losses and subtract gains. Seems backwards, but it works. Okay? I don't want the loss in operations. I want the loss in investing activity. That's what's going on. Okay? All right, what else do I know? Now, how much must I have bought? How much plant and equipment must I have bought, you guys? 420 less 30 is 390, and now it's 500. How much? 110? Is that right? It must be 110 that I bought. Okay? So what do we do? Where does it go? Investing. Purchase plant and equipment. And notice I said we would show both the increase and decrease in these areas, right? So both of these with plant and equipment, but one's cash out and one's cash in. So I got that one done. Wow. Now you can check off plant and equipment. What about accumulated depreciation, though? You started at 70, you debited it for 10, that made it 60, and now it's 85. How much must you have added? 16, got up to 85. I think you put 25 in there, don't you? Debit depreciation expense, credit accumulated depreciation. Right. This is going to be nice for getting some of that stuff from earlier in the course solved, right? Same things. So we got 25. So what will we do with that? You know what? There's no cash in that transaction. But where's the depreciation expense? Well, it's included in cost of goods sold and operating expenses in this statement. They don't have a separate depreciation expense, but it's somewhere in there, isn't it? It's got to be. So what do we do? Add depreciation expense. And we're adding the expense, you guys, not, so which was it, 25? Not accumulated depreciation. It's the change, right, in the account that we're writing down. And now you can check off accumulated depreciation. Okay? How about long-term investments? What do we know about long-term investments? What did it start at? What did long-term investments start at? What did it end up at? It went down by 7, I think, and down below it says what? Oh, they sold an investment that it cost 7. So long-term investments got credited for 7, didn't it? What did they sell it for? 12, right? What does that mean they have? 5 what, you guys? Gain on sale, huh? Look at the income statement. Oh, look at that. There's a gain on sale of investments. So what do I want to explain? I want to explain the 7 change. But what am I going to put under investing activities? How much? 12. Why is it going under investing? Because it's a non-current asset, right? Sale. Whoops. Investing key. Sale of long-term investment. That's simple. Do I have more or less cash if I debited cash? I think it's more, don't you guys? But that 12 is too much. I only wanted to explain 7, huh? So what do I have to do to get it down to 7? Deduct a gain on the sale. How much was it? Okay. We're doing it. Okay? Okay. What's 12 less 5? 7. Okay, where are we now then? What do we have left? Bonds payable? What's the deal with bonds payable? It goes up from 170 to 195, and it didn't mention bonds down below. So did they retire any? I guess not. What must they have done? Issued bonds. Where does it go? Long-term debt. Long-term debt. Financing. It's where your financing comes from. Okay? So issue bonds payable. How much was it? 25? Do I have more or less cash if I debit cash and credit bonds payable? More, right? Think of the journal issues. It really helps. Now, we did retained earnings. Let's do common stock. Common stock goes from 200 down to 160. Did they issue stock or did they retire stock? You went down there, retired it. Where does it go? Financing. Retire. Might be buying back treasury stock, but they showed it as kind of retiring stock. Okay? So retired, 40, cash would go out, right? It's debit common stock and credit cash, isn't it? Okay, there's one more thing. We checked off retained earnings, deferred income taxes, and we'll talk about why this is next time. But on deferred income taxes, I increased my deferred income taxes by 8, which means that my tax expense on the income statement is 8 more than the cash that went out. What the author did is they added it back to operations, which is just fine. They put in increase in deferred income tax payable. The other thing you could do if you want, I'll accept that 8 more cash, right? Because I borrowed long-term from the government, really. If you want to put it under long-term financing, that's okay too. Put the 8 over there. This is the way the author did it, and then they add them up. What is this going to be? Total cash flow from operations. This one up here is going to be total cash flow from what? Investing. And this one's going to be total cash flow from what? Financing. Add them up. Once you get those 3, you add those together and see if you get the -7. And if you do, you're done. So what did those add up to? Operations, if you look at the answer, it's 104,000. Okay? Investing, 80 negative. Be sure and get the brackets right. Okay? Financing, 31 negative. If you add together 104 less 80 less 31, is it a -7? The answer is yes. And you know you did it right. So once you're done with this, you know you got the problem right. Okay? A lot of you are going to do really well on this. Right? Hopefully all of it. We'll have a lot of 30s in this quiz. Okay? A lot of 30s. Yes, sir.
So what are the, why do you keep brackets on the right?
If cash went out, I put brackets.
Okay, that's what I
If
thought.
cash comes in, no brackets. Stay in cash. Or credit cash, however you want to do it, right? Got it. See you guys. Work, 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 and stop working on your other classes. Do mine, for heaven's sake. What's wrong with you people?
Do we have a quiz on Friday this week?
I think we do reviewing stuff on Friday, don't we? Quiz Monday?
Yes.
Is that right?
Yeah.
It is Monday.
I don't know, so I didn't look.
Okay, good. I think, check your syllabus. If you guys have been lying to me,